some negotiations, a ceasefire for the time being anyways. Let's see if this holds again, cross our fingers. And so what we actually saw on Monday and really throughout the week so far is markets have been up afternoon, and welcome back to the first full week in trading here again. It feels like in some time. We have a lot to cover this week with economic indicators on Friday, just ahead of the big news that came in over the weekend, of course. So we have quite a bit to touch on here this week. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after every interaction, and certainly to share some updates each week as the news and data unfolds. And again, this week we're going to focus primarily on a couple of things, one being the economic indicators. But we're actually going to spend quite a bit of time on the big news that came in over the weekend, both for what we kind of saw heading through the weekend and into Monday, but also a great question of the week from Jenny, which is kind of about what to watch for in case tensions were to increase from here. Although hopefully, fingers crossed, hopefully things look to have subsided quite a bit. But before we get to that, I do want to touch on a couple data points. First, I want to touch on Friday's leading economic indicators, which did show that we were down from that perspective, 0.1%, which was right in line with expectations. We also had consumer confidence come out on Tuesday, down slightly as well. And then today, on Thursday, we had the revision for GDP numbers looking backwards. So this is not a new number, but the revision, which remains the same at minus 0.2%. So really, for the most part, no surprises across the board here, but did want to share just generally where we fell with some of these data points. And then wanted to spend a good majority of our time talking about the news over the weekend, and then we'll also jump into the question of the week, which we'll talk a little bit further about what to watch for looking forward. So, of course, we had the big news on Saturday evening, which is in regards to the U.S. bombing of Iran nuclear facilities. Now, this obviously sparked a lot of concerns into the weekend of what could happen and how this could translate to potentially escalations, as time went on. Now, since then, what we saw is actually we saw some negotiations, a ceasefire for the time being anyways. Let's see if this holds again, cross our fingers. And so what we actually saw on Monday and really throughout the week so far is markets have been up. I think the reality or the reason for this, is primarily due to this optimism around avoiding, what could be a much bigger issue with more involvement and possibility of what's called the Strait of Hormuz and what that could mean for higher oil prices, which we'll talk about here in our question of the week. But there was a lot of concerns with the news originally of what this could mean with escalations and responses and, all the above. And so I think what we saw on Monday was because of the seizing of the war between Iran and Israel, or at least the conflict for the time being anyways, we saw the markets respond positively. Now, whether this holds or not, we'll have to wait and see, but it is kind of interesting because it almost acts as if the markets were pricing in this already, which of course is not the case. So very interesting to see that. Again, markets have held so far for the week, held up. And so I think, again, a lot of this came from that optimism around what this could have been and turned out so far not to be at this point. Be sure to tune in next week before we piggyback off of this for our question of the week. Coming up next week on Thursday, we'll cover quite a bit. We have income, spending, and inflation, which of course are very timely as the Fed looks to inflation as they kind of determine that next move. So we're going to cover a lot next Thursday. But before we do break for the week, again, great question of the week from Jenny, which is maybe a little less critical at the moment with where we stand with the tensions in the Middle East. But the question is really what to watch for with these tensions and if things do escalate. Now, I want to share again, I'm going to cross my fingers for the third time today, that hopefully things are a little bit more behind us and we don't necessarily see any conflicts increase. However, if that does happen, I did want to share some things to consider or to watch for in that event, just for in terms of how this could transpire in the markets, right? So again, hopefully none of this actually happens, but I did want to cover this just briefly because I think it is still top of a lot of people's minds. A couple of things that I'll mention is that one of the big concerns was what could happen if Iran were to try and close down the Strait of Hormuz. Now, there's a lot of debate of whether or not that's actually feasible and what that could mean, but that was one of the big economic impacts of all of this. And if that were to happen, the real big concern would be what that might mean for oil prices. And so if that were to happen, what we could see is oil prices spike pretty significantly. Now, the US is maybe a little less subject to that impact versus some other countries, but nonetheless, I think oil prices here would feel it as well. And so it's really important to keep a close eye on that, because if anything was to pick back up and that were to come back into play, we saw oil prices increase at the end of last week. They've dropped significantly since, but that is something to keep a close eye on. And we saw a lot of defense in terms of energy and gold prices going up as tensions were escalating there. So that is definitely something to watch. And what that, obviously, the concerns started to lead towards was, okay, with higher oil prices, we could see higher inflation, and therefore we could see a real impact to the consumers. And I will share that although this could be pretty broad-based, this could really have a pretty big impact on Europe, more specifically, as they're trying to get out of some of the challenges that they're in right now. So, again, hopefully we don't really have to come back to this, but I did want to share it because it was a very, very important topic on Monday. Obviously, things have fizzled out a little bit so far, and hopefully that remains to be the case. But hopefully that does help, just to give you some ideas or things to watch in case this kind of sparks more of a conversation here in the future. So again, I think really paying attention to oil prices would be important, and then really looking at defensive positions, because obviously if that were to happen, it could have an impact on the consumer, it could increase inflation, and we could see some challenges in the economy. Now, again, hopefully all that is behind us, but I do want to be sure to share that in hopes that it helps in the event that something does come up, or just regardless, just to kind of give you some insights into some things that were being looked at, as things were kind of escalating there through the end of last week and into the weekend. So hopefully that's helpful. Great question of the week. And be sure to tune in next Thursday. Again, we're going to cover income, spending, and inflation, which are going to be very important given the Fed's focus there from the press conference recently. In the meantime, have a great upcoming weekend, and we will see you next Thursday at 3.